Hello guys, welcome back to the video. I'm your host Sharman and today we will discuss about the common confusion question which most of people have regarding the export. So we know that we have the two options for export. First one is like that you can export with payment of tax or with payment of IGST, and you can also export without payment of IGST. In that case you have the option of bond and LUT. But both two options have a lot of confusion which people regularly ask me, and I decided to make a video on those kind of confusing question. So you can see right now into your screen the question which is the confusing question, which maybe also question of you. If you like, if you seems that this question is also your question, then you can watch the video. If you don't have any kind of question like this confusing question, then you can just flip it out the video and save your time. Alright guys, so now we should start our video. Alright, so first we will discuss about the option number 1, which is like export with payment of tax. So the confusing question number 1 is that when to make payment, shipment wise or up to 20th of following month, that is before filing the return. So as you can see that people also have the query like whether we have to make the payment of IGST shipment wise when we export the goods out of India, or we can also pay the tax before the 20th of the next month, or you can say before filing the return. So the answer is that you don't need to pay the tax each shipment wise. You can pay the tax up to filing of return. So like a normal person, you don't make the payment like shipment wise. You don't also need to do that. Just make the payment before filing the return and you will done with your duty. Next confusing question for the export with payment of tax is, please explain by example in case of export with payment of IGST what amount I have to pay before filing the return and what amount I will get refunded. So this is also a question of a lot of people, like what amount I have to pay from my pocket and what amount I will get refunded from the department. So you know that you have to make the payment of IGST and you will get the refund of that amount. But now the question is like what amount exactly, what should be the amount which you need to pay from your pocket, and what is the amount of return, what is the amount of refund. So as you can see right now into your screen, this is example like IGST on import is 1000 rupees and input tax credit is 400. So like net amount payable which you are required to pay from your pocket is 600. Remember that 600 will be the payment which you have to make from your pocket, and you can also adjust the ITC at the same time. So refund amount will be 1000, which is like IGST on export, and the net amount will you have to pay before filing the return is 600. So 600 is the net amount which you have to pay from your pocket, and 1000 will be the amount which you will get refunded from the GST department. Next question is regarding the ITC, and it says like whether we can use input tax credit for making payment of IGST payable on export. So as we see earlier into the example, you can simply adjust your input tax credit for making the payment of IGST for export. So this is the thing which I think also a question of a lot of people. Now next question is regarding the refund of input tax credit, and the question is whether we can take refund of unutilized input tax credit in case of export with payment of IGST. So this is also a question like people want to say like I am exporting without I am exporting the goods with payment of tax, then whether I can also get the refund of unutilized input tax credit. So the answer is no, you cannot take the refund of unutilized input tax credit if you are opting for the option of export with payment of tax. So section 54 subsection 3 clearly restrict you or prohibit you to take the refund of unutilized credit in case you are opting for the option of export with payment of tax. So section number 54 subsection 3 says you that you can take the refund of unutilized input tax credit only in case you are exporting the goods or service without payment of tax. So in case you opt for without payment of tax, only those cases you can take the refund of unutilized input tax credit. So simply mean if you have availed the option of payment like export with payment of tax, so you cannot take the input tax credit, unutilized input tax credit refund. Next question is regarding the procedure, and the question is, in case of export of goods with payment of IGST, is there any form to be filled for taking refund? So this is also a question like whether you have to also fill some kind of form to get the refund. So the answer is no. In case of export with payment of tax, you don't need to fill out any kind of form for taking the refund, because the shipping bill will itself be considered as a deemed application for the refund. So like when you file the shipping bill, it will be considered as the deemed application for the refund. And like when you will also file your GSTR1 table number 6 and also GSTR3B. So when you will file GSTR1 table number 6 and also GSTR3B, so like table number 6 is regarding the detail of export. So when you will fill table number 6, then it will be like sent to the custom department. They will find out like whether you have actually exported the good out of India or not, and when that will be cross-checked with the custom database, then you will get the refund automatically into your bank account. You don't need to file any GST RFD01. That form is for someone else's purposes. So if you are exporting with payment of tax, you don't need to file any kind of refund application. You just simply file your GSTR1 table number 6 and also GSTR3B, and your refund will be automatically credited into your bank account with the due course of time. So this is also thing which you need to also remember in case export with payment of tax. Next question is regarding the export of service, and the question is, in case of export of service with payment of IGST, is there any difference in procedure for taking refund? So the question is like, in case of exports of goods, you don't need to file any application, but in case of export of service, is there any change in the procedure? So answer is yes, there is a change in procedure, because in case of export of service with payment of tax, you need to file the form GST RFD01. So because in case of a goods, the like table number 6 will be cross-checked with the custom database, but in case of export of service, the custom department don't have any data of you. So therefore, in case of a export of service, you have to file the refund application into GST RFD01, and also with the documentary evidences like statement number 3 and also statement number 3A for like in case of exports with payment of tax, you don't need to give the statement number 3A, because that is for the calculation of refund amount. Simply also submit like the documentary evidences which is in the statement number 3 of the annexure attached with GST RFD01, and that thing will be done. So there is a change in procedure in case of export or service. In case of export or service, you have to also fill out the refund application in GST RFD01. And one more important fact, because right now the refund application is not processing from electronically, so therefore for the time being the manual filing of refund application is also there. So the form is GST RFD01A. Form number is GST RFD01A. So how you gonna fill it? Like you have to fill it electronically, then take the printout of that form and then submit it into your jurisdictional proper officer. Then they will process the refund application accordingly. So there is a detailed circular in respect of that. So we will also discuss it into our like next question when we will discuss about the export without payment of tax. So we will discuss the procedure there, like what exactly the circular number of that. So this is the thing, like change is also there in the procedure for export of service. And the last confusing question of the export with payment of tax is like this. So it says like whether I can choose this option if I am purchasing from supplier who is availing benefit of notification number 48/2017 of central tax for deemed export and notification number 14/2017 of central tax rate for reduced rate of 0.1% when supplying to merchant exporter. So like the supplier of goods to you, if you are the merchant exporter or you are exporting the goods out of India and the supplier which are selling the goods to you is taking the benefit of the notification number 48/2017 for the deemed export and the benefit of notification number 40/2017 of central tax rate for reduced rate of 0.1% selling to the merchant exporter, then the question is whether you as an exporter or as a merchant exporter can take this option like export with payment of tax. So the answer is no. In case the supplier from whom you are purchasing the goods for export is availing the benefit of notification number as mentioned in this example, so you cannot opt for this option of export with payment of tax. So this has been changed, like there is a change in rule by way of notification number 75/2017 dated 29th November 2017. So this is the 14th amendment in the CGST rule, where it provided especially that if the supplier is taking the benefit of notification number 48 or notification number 40 of central tax rate, then you cannot opt for this option. So this is also a thing like amendment in the CGST rule. I don't know why it is happened, so but this is a thing. If you are like the supplier is taking the benefit of notification number 40 and 48 of like the central tax or the central tax rate as may be applicable, so you cannot take this option of export of goods with payment of tax. So this is also a thing. Now we will discuss about what exactly are the confusing question which the people have when they are exporting the goods or service without payment of tax. Alright guys, so first question is regarding the formula for taking the refund of input tax credit, and the question is whether we can take refund of full unutilized input tax credit or there is any formula. So yes, there is the formula which is prescribed under rule 89 sub rule number 4. So the formula is like you can take the refund of unutilized input tax credit, and the formula is like refund amount will be equal to turnover of zero rated supply of goods plus turnover of zero rated supply of service divided by adjusted total turnover multiplied by net input tax credit. So adjusted total turnover and then the meaning of turnover of zero rated supply of goods plus service, and the net input tax credit has a meaning which is assigned into this formula into the rule 89 sub rule number 4. You can check it out, but the thing is this, all the same figures should be for the relevant period. For like you are taking the refund of 1 month, so then hold the figure like turnover and the net input tax credit, then adjusted turnover should be for the same period, and it is quite obvious. So this is the formula for taking the refund of unutilized input tax credit in case you are opting for the export without payment of input tax, without payment of duty. So this is the formula. You cannot simply apply for refund for whole of the input tax credit if you are supplying the goods to India as well as exporting the goods to outside India. So this is a set formula by way of which you have to calculate the amount, and that calculation will be also sent in the statement 3A of the GST RFD 01. So you gotta remember the formula for taking the refund. I will also make another video for the practical example of the refund calculation of this much. So we will also discuss it into the next few videos, how you have to like practical example of the refund amount which you will get in case you are applying for the refund of export without payment of taxes. Alright, so next question is what is the procedure of taking refund in this option of export? So this is also very important question, like what is the procedure of taking the refund of unutilized input tax credit in case you opt for the export without payment of taxes. So there is a set procedure. So first of all, you gotta fill the GST RFD 01. So GST RFD 01 you have to file, and when you will file it, then you have to also submit some documentary evidences which is given into rule number 89 sub rule number 2. So there is a lot of like documentary requirement as a proof so that it can be established that you export the goods or service legally out of India. A lot of things is there, like different requirement of documentary evidence is there, and then you have to also submit those detail into statement, different statement which is attached into the form GST RFD01, like table statement number 3 for export of service, and then statement I think number 2 for exports of goods. So a lot of statements is there, so you have to also fill out those statement also with the GST RFD01, and then when you will submit it, then it will be acknowledged by the GST department within the 15 days when you submit the application. And then after acknowledgement, then 90% amount will be provisionally refunded to you within 7 or 5, let me see it, like what is the exact timing, within the 7 days from the date of acknowledgement. So acknowledgement is like 15 days from the date you submit the document, and then it will be 90% will be refunded to you within the 7 days from the date of acknowledgement. And what about the whole amount, like 10%? So whole amount like 10% will be refunded to you within the 60 days when you submit the application in complete all respect. So this is the procedure of taking out the refund. So fill the form GST RFD01 and then submit it. It will be acknowledgement within 15 days, and then 90% amount will be refunded to you within the 7 days from the date of acknowledgement, and 100% amount will be acknowledged refunded to you within the 16 days from the date you file the application in all complete respect. So this is also like the procedure of taking out the refund of unutilized input tax credit. And in case of export of service with payment of tax, like in the first instances, so like you have to also like submit those kind of GST RFD01 and then take the refund, and the same procedure like acknowledgement is also there. And then but in those cases 90% provision is I think will be also applicable on those cases. And then this is also procedure, but there is also provision of manual taking the refund. So how you can manual take, because you know right now the refund application is not processing from electronically common portal. So for the time being, there is a circular by way of which it explains like how you have to file and in which form you have to file the refund application. So refund application will be filed in the GST RFD01A, and like in those cases where you want to take the input tax credit refund of unutilized input tax credit. So first of all, you have to debit your electronic credit ledger. You have to debit your electronic credit ledger and then take the printout of this. It will be give you like acknowledgement number. So you have to also attach the acknowledgement number and then the proof of debiting the electronic credit ledger from you. And the amount of like debit to the electronic credit ledger will be the amount which you want to take refund. And then like all the things like documentary evidence will be attached with those GST RFD01. Fill that into the common portal and then take the printout, submit to the GST department officials. Then they will do their thing like 15 days acknowledgement, then 7 days 90% amount refund, 60 days from amount will be refunded to you when you submit the application whole respect. So this is also a procedure for manual taking out the refund. We will also discuss about manual filing of refund application in detail in our separate video, but for the time being this is the thing like procedure which you can remember just for now. Next question: when to file refund application, monthly, quarterly or half yearly? So now this is also a question like when to file refund application. So you can file the refund application monthly, either quarterly or half yearly, but the thing is that the formula for taking the refund of unutilized input tax credit, all the figures should be like when you are filing for the monthly, then monthly figure should be there. In case quarterly, then quarterly figure. In case half yearly, then half yearly figure. And you have to also give the detail of the refund period into also table GST RFD01. So therefore it's not like you have to submit it monthly, you can also submit it quarterly or half yearly, but I will suggest you to put the figure or take the refund monthly, so that it will be very easy for you, and you also want to take like the refund as fast as you can. So therefore file the detail monthly and you will do the work. Next question: is it possible to export some goods with payment of tax and some without payment of tax? So I think no, you cannot do like those two things, because it will now, if you will do the like some goods with payment of tax, some goods without payment of tax, then it can be conflicting, and do not do this. I will suggest you just opt for the one option. And in case like you submitted the LUT to your jurisdiction assistant or deputy commissioner, so you know that it is valid for 1 year, one financial year. So therefore don't go for the two option, just apply one option for the whole financial year. If you want to change the option, then change it from the next financial year when your LOT validity will be finished. So that's how it will work. Don't mix it up, the two supply, because in case of exports of goods, like when you want to opt for only the one option, then opt for one option, because it will also create confusion while calculate the refund amount of unutilized input tax credit. So therefore don't go for the two options, just simply opt for the one option. You will be like really not confused, and the thing will be easy for you, I will say this. Next: is there any special point which I should remember while filing GSTR1 / table number 6A in case I have opted for export without payment of IGST? So is there anything which you should consider before filing the table number 6A? So yes, there is a thing. Like table number 6A, when you file it without payment of taxes thing, then for the tax amount, just mention the zero amount into the IGST or CGST, SGST or UTGST. Why? Because there is a like instruction into the table like GSTR1. So when you will see the instruction in the GSTR1, so there is clearly mentioned that in case you are exporting the goods or service without payment of tax, so you have to mention the zero amount into the tax column, so that it will be processed. And when you will do it, so it will basically means that you are exporting the goods without payment of tax, and your like processing of refund will be done accordingly. If you by chance make the mistake and you file like mention the IGST amount into those things, then it can be like you ended up taking the dual benefit, like one from the GSTR01 and then one from the automatic process. Because in case when export with payment of tax, the whole thing will be done automatically and the amount will be credited into your bank account without even you notice that whether that amount has been credited or not. So therefore it is very important that when you are exporting without payment of tax, just fill the nil figure into the table number 6A in case of a taxes column. So that's how this thing is also be remembered by you. And then the last one is like, please explain by example which option is better for me. So this is also a very big important question which a lot of people really have. So like which option is better for you? So I will say you both option is same and equivalent, just the procedure is different. The amount which you will get from the department in net will be equal. So let me just give you by way of example like how the two method is equal. So as you can see right now on your screen, the left hand side is for the export with payment of taxes and right hand side example is for export without payment of taxes. In both two cases, IGST amount of export is 1000, input tax credit amount is 400, and then net amount paid is like different in this case. So first one, export with payment, because IGST amount is 1000, input tax credit is 400, so net amount you have to pay from your pocket is 600. And then the refund amount in this case will be 1000 from the department and you paid by your pocket is 600. So net amount which you receive from the government is 400. And in the second case, export without payment, IGST amount is 1000, input tax credit is 400, but the net amount which you have to pay from your pocket is nil because you opted for the option export without payment. So it means that you don't need to make any payment. Now the refund amount in this case will be 400, which is the input tax credit unutilized. So I am assuming in this example is you are wholly exporting the goods out of India, so therefore you don't have any domestic sale. So therefore the like formula of taking out the input tax credit refund is not there. So therefore 400 whole input tax credit amount will be refunded to you, and amount you paid from your pocket is 0. So therefore net amount which you receive from the government is 400. So as you can see in both two cases, the net amount which you receive from the government is equal. So therefore I will say you there is no like which one is beneficial for you. Both thing is same, but the slightly different is the procedure of taking out the refund. In first cases, export with payment of tax, you take the refund of IGST amount which you charge from like which you mention into your invoices, but you from your pocket you pay the amount after adjusting the input tax credit. So therefore the thing will be same, the amount which you will get refund will be same, just the only difference is procedure. So in case of export without payment of tax, like your funds will not be blocked, but at the same time you have to also file the refund application, then do the calculation and do all the stuff. So therefore if you want to just simplify your process, then make the payment and do the export, amount will be refunded to you automatically. In case you are wondering about or you are taking the tension about the working capital blockage, then opt for the second option without payment of input tax credit. File the GST RFD 01 monthly or quarterly or half yearly and take the refund. Alright guys, so this was the thing which confuses most the people. If you like the video, then please give the video a big thumbs up. If you haven't subscribed till yet, then subscribe to the channel, and if you have the friend who are still wondering about this question, then share this video to those friends, and I hope that their query will also be solved after watching this video. Alright guys, so as usual we will again meet in the next video. Till then, bye bye.